So what qualifies for a break of structure? A lot of people talk about break of structure, but what actually qualifies for a break of structure? Now, this is actually instrumental in understanding the concept of break of structure. Very, very instrumental when it comes to understanding the BC30 strategy. In order to effectively carry out the BC30 strategy, you need to know this fundamental principle. What is a break of structure? And we're going to go into the charts right now and show you what a true break of structure is. Let's go into the charts. All right, guys. So we are on the charts. We're on the gold chart as usual. And we want to talk about break of structure, right? Because people have different types of meanings, different types of things that they mean when they talk about a break of structure. When most people talk about a break of structure, they're talking about an area of consolidation as such, right? We have an area of consolidation right over here. Talk about an area of consolidation, price is boxed in, and they're talking about the first time a candle breaks out of that area of consolidation. Now, that is fine. However, a lot of times people leave it at that and consider that the break of structure. And to me, when it comes to my strategy, that is not where the break of structure ends. Break of structure ends after I have seen the product of that candle, specifically on the 30-minute time frame for BC30. Now, I need to see whether this candle is going to turn out to just be a wick that broke out of the area of consolidation, or is it going to close? And when we say close, we mean that the body of the candle closes above or below the area of consolidation. Okay, that is crucial. That is extremely crucial. Break of structure, you have to understand, when it just wicks out of an area, that doesn't necessarily mean nothing, right? There was a quick moment of momentum, but price was not able to sustain itself, and it's not a true break. That's why when many people, when they have their breakout strategies, if you don't see further confirmation that it's actually a breakout within their strategy, then their strategy is not going to succeed as much, because you need to realize that you're going to get a whole lot of false breaks. And let's go into the charts and see where we could find typical areas where we would see some false breaks. Right over here, I didn't have to look too far. Right over here, you have price in this area of consolidation right over here, and you have a false break over here. If you are looking towards price breaking out of this, especially look over here towards the outside, you're looking for price to break out of this, what actually happens is you have a wick that comes out, right? And for you, if you consider this a break of structure, you're going to take a loss because you did not have confirmation on whether this break of structure would be maintained, or in other words, if it's going to be a real break of structure or a fake break of structure, right? A fake out. So because it did not close above that area, right, you do not have the confluence that you need to qualify this as a break of structure. The concept of waiting for the body of the candle to close above or below the area of structure is very, very crucial, and it allows you to save yourself from unnecessary losses, right? When it comes to this game, there's a couple of things I want you to understand. Your win rate can matter to an extent, especially for more of a scalper type of trader. And also the quality of your confluences does matter, right? I don't want a confluence just to throw in a confluence, right? I don't want to just say, oh, hey, this hits the 50% on the Fibonacci. Oh, hey, it looks like this is under my SMA. All of those things are nice, but I need things that really make sense, that really validate what I'm trying to do. Okay. And one of those things that validate like a BC30 is what actually makes a break. That actually, really knowing what makes a break and defining that and being right about that validates a BC30, because it's all about that break on that 30-minute time frame. Okay. So as we go through different examples, I want to show you examples of what would qualify as a break when the candle actually has a solid close above the area of resistance. Again, what qualifies as a solid break? We had an area of consolidation over here, right? We're waiting for price to break out. We have our breaking candle. We have our breaking candle right over here. That is our breaking candle. And where do we enter this trade? As the next candle is passing the breaking candle. And how do we know it's a breaking candle? Because the body of the candle closed above the area of consolidation. Okay, and that's how we want to do it. That's how we want to qualify it, and that's how we save ourselves from jumping in too early. Look over here. Look at this area. This is a false break over here, right? You had the area of consolidation, right? We know that price is boxed in over here, so we're waiting for, well, where is price going to break out? Where is it going to break out? We're boxed in, but this would look like it broke out. But look at this, right? We had a wick, but it quickly came back in. And let's just say, for the sake of it, you're just going based on momentum, right? Maybe you could win this trade, especially because this wick goes quite the distance. However, if you catch this wick at the wrong time, what ends up happening is you're not going to be able to sustain the stop loss for this. So as a result, this trade becomes a loss. It is much better to just wait on that actual real break. Okay, it's much better to just wait on that. And guess what? Sometimes you wait on that and the candle goes way beyond where it's supposed to go. For instance, like this particular example, although this was the breaking candle, because the candle went so far beyond the area of consolidation, it ends up being a no trade, because obviously it's going to be asking the market for quite a bit much for it to go even beyond that. So as you can see, there was no trade that was taken here. But all of these nuances, right? All of these things you have to understand with any strategy, and confirming any of the confluences within that strategy, what's going to happen is you're going to miss out on certain opportunities because you need to qualify certain confluences. That's natural. That's okay. It's all right to miss out on certain opportunities. But what's more key is that when you actually get into those opportunities, when those opportunities present themselves that actually line up with the strategy, how accurate are they usually hitting? And that is what I'm really tracking. All right. That's what I'm tracking more than anything. My rule of thumb for you guys is stop just letting a wick run you crazy. All right. A wick is a wick, but a wick means nothing. And you don't know that it ends up being a wick until you allow that candle to close. If you can't wait for a whole hour, then wait on the 30-minute. If you can't wait for the 30-minute, wait on the 15-minute. But no matter what, wait for that candle to close before you say this is a definite break of structure. All right, so if you follow this tip, I definitely think it's going to improve your strategy. It certainly is going to improve your win rate. And I think if you just continue to implement these things and be more disciplined, you're going to see profitability more and more and more. All right, guys. So I hope you guys gained value in this video. If you did, like, share, subscribe. I'd really appreciate it. Until next time, guys. Peace.